The euro was a market today that we jumped right into because we knew right away this was probably going to be a slam dunk trade. Saw this one coming a mile away. The biggest thing we see right away though is this wedge, right? First thing we see is the wedge. Now, you got to kind of zoom out a little bit further on this to see it, but we had an 89 range chart that had helped us find a trend line at the low and of course some trend lines here at these highs. Now, a price wedge is a very important price structure because it tells me the market personality. It tells me fake out breakouts, fade the highs, buy those lows, right? So when price jumps up, I'm going to sell it back down. A price wedge, like I always say, if I could trade one price structure the rest of my career, it would be the price wedge. And then watch what happens next. The next clue we get here, this is the old wedge. So we knew we had this old wedge in here that had broken, right? And what do we think about when a wedge is broken? Exactly, fake out breakout. Price should go up and come right back down in. So the wedge pattern, that was the first big clue. The second clue we got, another real easy clue. Where's your previous highs and where's your previous lows? This is the previous day's range. And where are we in comparison? We are just above it, just above the previous high of day. So remember, this is the trading range from Thursday. Now, not to go into too many details, come in on Monday in the trade room and I'll go into more detail about this, but ultimately the way that this works, and this is exactly the same way we called that big 100-tick tumble right on crude yesterday, was knowing that when the price moves above the previous highs, you're bullish. But when you combine this with a wedge, there's a very high likelihood now that instead of going higher, it is going to tumble and go back down into that range. So the wedge pattern says fake out breakout. The fact that we're just a little bit above that previous high of day, right? And of course, in a relatively slow, sloppy OPEX Friday, right? Low volume, a little bit sloppy there. And we had one more thing, didn't we? We got a dollar correlation. That dollar correlation broke its bear channel, started to go higher. All kind of signs led to us thinking that price would come tumbling back into the previous day's range. So my second clue this morning here on the euro was we were above the previous high of day. And basically that tells me if we keep going higher, I'm going to buy a pullback. So we knew we had a 34 range wave pattern waiting for us. But we had a feeling though, if that dollar kept going higher, this euro is going to tumble and go back down into that previous day's range. And that is one of the higher percentage trades we have. So second clue was the outside day or inside outside day transition. And of course, the third clue. And this one required a little bit more digging. You had to kind of put your thinking cap on for this one. Mark up your swing high up here at 3,800. Mark up your swing low down here at 34, 36. And of course, we go from high to low. And that creates what? That creates this trigger zone right here. Now, members are taught on how to draw the trigger zones. This is nothing new for us. And a trigger zone, in theory, should result in a wave pattern short. Okay? So think of this as a wave pattern on a slower time frame, right? Back up a little bit. Obviously, too, if price was to go through that trigger zone, we'd want to be very bullish because that would be a very strong signal, right, of higher prices. So the trigger zone was a big clue. And the trigger zone, think of it as where am I in relationship to the trigger zone? Where was I? We were below it. But notice how we just tested it, right? Notice how we went up, we test the trigger zone, and now we're coming back down. Now again, at this time, we gave you two clues, right? We basically gave us two opportunities. It was going to be a wave pattern long, or if it failed, it was going to come tumbling back down, you guessed it, into that wedge, into that previous day's range. And at 7:45 this morning, even though we had to wait about 2 hours to get there, we said, guys, I'm going to be selling this thing if it goes back below that previous high of day. And that's exactly what happened. We got a little bit of a pullback for a wave, didn't go very far before it tumbled back down. Now, it was funny because I took a loss on the first entry. All right, I'm not going to cover it right now, but I took a 4 range entry on it made a horrible impulse trade, not getting into it, but not getting out of it, and wound up making a scratch trade into a small loss. So if you look at my results here, you'll see I got one loss there for the first trade and then followed it up with two more winning trades. You know, one of those situations where I remind my members every day, our emotions are real. And just because you've got 10 years of experience and you make money every day, doesn't mean those emotions disappear. And I really felt like that this morning as well. So remember, it's a constant every day we're managing those emotions. And as you can see here, again, my track record postable video here, the first trade, I could have easily gotten out of that for a very small loss, but instead had some pride, right? I'm hoping and praying the market turned around, and what did it do? It stopped me out anyways, and I had to then get back in. I should have manned up, taken the loss when I knew it was a loss, and then waited for the next pattern, which you can see right here. We learned a valuable lesson about that. So here we are on the euro. Here's that previous day's trading range. All right, up top here, of course, was your trigger zone, if you recall, right? There was that trigger zone, if you recall. And also on top of that, we had, right, the wedge here, right? That was the old wedge. Okay, so now you see what we're looking at. This is a 13 range chart. Again, range charts, different than time charts, uses range instead of time as the variable. So what happens is, again, we break out above it. Think about it this way. This is going to be a wave long up there, right? Well, when it failed and went back below the previous high of day, that's when we were waiting for it. As you can see here, if you got into it early at about 7:45, there was a wave pattern long there. That was definitely a good trade. This is a breaker pattern long right there. Okay, so if you're up early this morning, about 6:30 this morning Eastern time, you definitely had some chances to buy the breakout. Well, when it fails and comes back down in, and again, we've been waiting for this since 7:30 in the morning, so we were prepared for it. We saw price go below the previous high. It retraces off those lows. Wave pattern 1. New lower low, retracement, wave pattern 2. Members took both of these for 10 ticks per contract. Now, once again, I gave you guys the exact stop, gave you guys the exact targets, and the exact entry location well in advance. We call this the fast track. The fast track, you'll notice, why only 10 ticks of profit? Well, the way the fast track works is I'm going to give you that guaranteed built-in profit. That way, all my brand new members who are learning this method more and more every day, they can jump into this trade with confidence, knowing they're going to get at least that 10 ticks. And then, of course, you saw with me this morning, I managed the runner and took some more profit off down at the lows. So if you're trading one contract, you're in and out, very simple. If you're trading 10 contracts, you could be in and out, very simple. So you don't need to be scaling out of the move. You don't need to be managing your runner. You will, though, when you get more experienced, and of course, having earned $100 per contract, do that 10 days in a row. That's going to give you more money, more confidence, and you'll be able to be trading 2, 3, 4, 5 contracts. Now, this week alone, we had so many winning trades in the fast track that members were moving from 1 contract to 3 contracts this week. So last week they made 10 ticks on that. This week they're making 30 ticks on that, right? Compounding their account, using other people's money. Obviously here they've won. So we go into the previous day's range, wave pattern 1, new lower low, wave pattern 2, and both of those got you 10 ticks per contract. And we gave you guys the exact entries, stops, and targets. I don't want to say it was easy, but it definitely wasn't difficult. And again, we knew that well in advance based upon our previous price structures. That's only 1 to 3. We're going to keep going here. Next up on the gold. Now, I've got to give the hats off to one of our guests, Francesco, this morning. He was the one who mentioned, let's grab the golds here, and in perfect timing.